Now, one of the new age stock picking themes is to look for companies that are disruptors. Mark Christensen is an investment analyst with fund manager Pengana, and he will pinpoint some interesting disruptors. Well, I guess I hope he does. How are you, mate?
Good, thanks.
Now, I noticed that part of your analysis was driven by Rhett Kessler, who's come on the show before.
Yes.
He's kind of your boss of Australian equities.
He's the fund manager and my boss, that's right.
Okay,
yes.
okay. And so, but the theme was around the fact that there are companies out there that are disruptors that have a lot of potential?
Yeah, there's a lot been written in the last 12 months about disruptors and game changes in general. As stock pickers, we're looking for the next big thing, and after the success of the Facebooks, the Googles, you know, we want to know what the next big thing is. I guess the risk with chasing that sort of a strategy is obviously survivorship bias tells us those ones that work. There's obviously many more out there in numbers that didn't work. So I guess one thing to be mindful of. The other thing is, for disruptors, you know, there are many challenges. Not all of them work. We've just said there are often challenges like cash flow negative for a period of time, earnings negative. It's a struggle to actually get your idea off the ground before it can be an investable type of a product. That said, we still think that there's opportunities for not just speculative stocks, but also for mature stocks to identify game-changing strategy that can benefit investors.
And that's the point. You don't have to be a brand new player in the market. You can be an existing player that comes up with a new innovation that really changes the game.
Yeah, exactly right. So, you know, one industry that we look at the moment is actually the healthcare industry, which is a mature industry.
And a popular one amongst investors.
And a popular one. Now, Medibank has come on the scene and we think is disrupting the scene to some extent, and not your typical disruptor that you might associate, but when you have a look at healthcare inflation in Australia, it has been quite significant for some time, well ahead of general inflation. That's a big problem for the two major funders, the health insurance industry, and of course the government. And there are questions being asked like, why has technology-led productivity gains not resulted in price deflation like we've seen in other industries? Why is price transparency not there like it is in other industries? If I need a reconstruction, I'm told that's $6,000, but how do I know that's the market price and what's behind that? So these are the questions that you know, Medibank and the other health insurers are starting to ask. What might come of this, and you know, what is the investment thesis behind this? Well, if these players are successful in pushing back against the medical services providers, we could actually see at least a slowing down of the inflation, possibly even a reduction in prices across the board in the medical services industry.
What does that do to the bottom line of, say, a company like Medibank? Yeah,
so Medibank, you know, NIB Insurance has been a stock that we've held for some time. We think is also a good play in the space. Yeah, one of the biggest costs for these companies is having to pay out on all the medical procedures when you put a claim, when I put a claim through. So
it cuts their costs.
It cuts their costs quite simply.
Goes their bottom line.
The beneficiary is us as consumers, but also the health insurance industry. So we look at that as a bit of a game-changing theme going on at the moment.
Medibank comes with a reasonable dividend even now, doesn't it?
It does. No, a lot of these companies, they're well-run businesses with established profits as it is. You know, there's not the risk of playing one of these options versus trying to pick the next Google. But as an investor, you can still benefit from what we think is a game-changing strategy. Number two, we see, maybe if I go a little bit to the more interesting end of the spectrum, there's a company called Nanosonics, which...
Nanosonics? That sounds so cool and modern.
It sounds very cool. So they're actually situated not too far from these studios. But so Nanosonics have essentially come up with this new sterilising gadget, mousetrap, if you like, which is a game changer for the industry. So where healthcare providers at the moment need big chemical-led processes, which is bad for the environment, takes up a lot of space, Nanosonics has this great new product which is very efficient, very environmentally health effective, and it saves costs for hospitals.
So hospitals and GPs and stuff like that, is it that cheap that a GP could buy it?
It's more for hospitals. Actually, it's ultrasound effectively. But this is a game-changing moment. Now, this is a stock that we looked at first probably 3 or 4 years ago. At that stage, we saw they had a good mousetrap, so to speak. It was unproven then. They had some products in situ. And I think when you're looking at these investment opportunities, you want to set yourself some milestones. You want to set yourself to say, okay, how many products are they aiming for to have in situ? what sort of earnings do they think, what sort of margins can they get, and you can track them over time. And we've done that. So since we first met them 3 or 4 years ago, they've delivered on what they said. We can actually see their product being installed in hospitals, we can see the hospitals using the product, and we can see their EBIT margin progressing quite nicely. So gives you, it's a very investable product.
Okay, now was ResMed one of the companies looked at as well?
ResMed, yeah, absolutely. So you spoke about a share price today, which is a little bit of a short-term movement, but in the background, ResMed are using technology to monitor the use of their products online, which is connecting healthcare providers, so doctors with patients and insurers, effectively, who are helping to fund it, and the government, in order to effectively, efficiently track the use, get a good handle on the customers, so opening up your contact with the customers. And the technology that they're using to do this, they're well ahead. We talk about first mover advantage. They're well ahead of their competitors.
So you're saying I buy some device
yes.
that is the sleep apnea,
Sleep apnea, that's right.
And in the past, people took it away and you kind of hope that they got it right.
You hope that they got it right.
Yeah, but now, every new one they sell in the future, they possibly can actually track it no matter where you are.
Absolutely.
So it's a bit like that, was it Homeland, where the president had a heart monitoring service somewhere in another part of America, and someone came in and fiddled with it and effectively killed him. Of course, we're not saying ResMed is going to do that, but the fact the technology is that you can monitor what's going on in the heart or in the nasal passages of a patient, that's a fantastic piece of innovation.
There's two really big parts of upside. The first of all, the internet allows us to do many things these days. It's a facilitator of disruption and game changing. So here is a case where doctors, health insurers can actually monitor the use of someone remotely. So it's very good from that perspective. Also for ResMed, it gives them a lot of information about how their products are being used out in the field as well, which, customer information is also worth a lot of.
Do you find it enjoyable, looking into companies, trying to work out whether they actually do have an innovation that's going to be a game changer?
Look, it is absolutely. It's enjoyable. It makes
being a forensic detective in a sense. Isn't it?
It is, and you've got to have a skeptical hat on the whole time, as we do. We don't look at game-changing companies any differently to say we would do more conservative investments. But look, part of our role is to try to identify the next opportunity, and being an absolute fund, I think, allows us to do that. We can spend time on looking for niche opportunities that we think we can make money on, as opposed to spending a lot of the time on banks and miners, etc.
And I guess one curveball you're always going to be worried about is that this company might look good in the national setting, but there can be international ones. I think of QuickFlix and the arrival of Netflix. So QuickFlix probably had potential as long as Netflix never came here. But once it came here, it was really on death row, wasn't it? Yeah,
absolutely. Like everything, you've got to have a look at the competitive advantage that any product, any company has. And when we, in our investment thesis for all of our companies in our portfolio, very clearly states what is the competitive advantage and how sustainable is that.
And how many companies do we have in your fund?
We aim to have around about 25 companies at any one time, so we're fairly concentrated.
Okay.
Right,
Mark, thanks for joining us on the show.
Very good.
That's Mark Christensen from Pengana. After the break, we'll go under the radar with Richard Hammond to find those tiny companies that have huge potential upside.